Welcome back to Explain the Charts, your go-to channel for deciphering market movements. Today, August 5th, 2025, we're putting the spotlight on the USDCAD currency pair, analyzing both the breaking news and the intricate details hidden within its charts. Recent headlines present a somewhat mixed picture for USDCAD. Some reports suggest the US dollar is trimming losses, potentially hinting at strength, while others indicate the dollar is tumbling due to expectations of US rate cuts. Specifically, markets are nearly guaranteeing a 25 basis point Fed rate cut in September, which could pressure the US dollar, but the Bank of Canada might follow suit, complicating the outlook for the Loonie. We also hear that weak oil prices are hurting the Canadian dollar, which generally provides a tailwind for USDCAD. The current quoted rate is around 1.3778 to 1.3787, indicating a slight increase today according to some sources. And economies.com even suggests USDCAD is attacking the 1.3860 resistance level amid a dominant bullish trend. However, it's crucial to note that our provided chart data, ending on August 4th, reflects movements leading up to these latest news reports. Looking at the broader daily chart, we see that USDCAD has experienced significant volatility over the past year. Before we dive into current levels, it's important to acknowledge some anomalous data points on the daily chart. You'll notice several extreme, single-day percentage drops in late 2024, like those seen in October, November, and December, some exceeding 10% or even 20%. These are highly unusual for a major currency pair and likely represent data glitches or extreme, non-representative flash crashes. We will largely disregard these specific extreme wicks when identifying core support and resistance zones, as they don't reflect sustainable price action. Excluding these outliers, the overall long-term trend from March 2024 to early 2025 showed a general appreciation, with the pair consolidating after reaching highs above 1.44. Now, let's zoom into the more recent and stable price action on the daily chart, focusing on the period from April 2025 to August 4th, 2025. Here, we can observe a general downtrend or consolidation after the earlier highs, with price gravitating towards the 1.37 handle. A critical resistance area to watch is the 1.38 to 1.39 zone, which has proven difficult to break consistently. The news report mentioning the pair attacking current resistance at 1.3860 aligns perfectly with the significance of this level. On the downside, a strong support level appears to be forming around 1.36 to 1.37, where price has found buyers multiple times in recent months, notably in early June and late June. Shifting our view to the 1-hour chart, let's examine a period of typical intraday volatility, specifically focusing on mid-July 2025. Between July 17th and 18th, you can see USDCAD largely consolidating within a tighter range, demonstrating the more granular ebb and flow within a broader daily candle. Price oscillated mostly between 1.371 and 1.375 during this period, with moderate volume, indicating a period of indecision or accumulation. For a clearer picture of the immediate lead-up to today's news, let's narrow down to the 15-minute chart, covering the end of July through August 4th. Here, a distinct short-term downtrend is evident, with USDCAD declining from around 1.385 on July 31st to approximately 1.377 by the close of August 4th. This recent bearish price action on our available data sets the context for the August 5th news, which suggests an immediate rebound. The previous day's close at 1.37688, as seen in both the 15-minute and daily charts, provides a clear reference point for the reported rise on August 5th. This divergence between the latest available data and current news highlights how quickly market sentiment can shift or how fresh information impacts price. So, where does this leave us for USDCAD, given the mixed signals from both news and recent data? From a bearish perspective, the recent decline leading into August 5th, combined with UBS's forecast for a drop towards 1.34 to 1.35 in the second half of 2025, paints a challenging picture. If the Federal Reserve proceeds with significant rate cuts as anticipated due to weak jobs reports, This could further weaken the US dollar and push USDCAD lower. The inability to sustain breaks above the 1.38 to 1.39 resistance area also suggests underlying selling pressure. On the bullish side, some reports cite a main bullish trend, and the current daily rebound on August 5th is a positive sign if it holds. Additionally, persistent weakness in oil prices would likely continue to weigh on the Canadian dollar, providing upward momentum for USDCAD. The pair is currently at a critical juncture, hovering around key support and resistance levels, making confirmed breakouts or breakdowns paramount for future direction. To recap the important price levels to watch, the immediate support zone is the 1.36 to 1.37 area. A decisive break below 1.36 could open the door towards the 1.34 to 1.35 level, aligning with UBS's longer-term bearish outlook, with a moderate likelihood if global economic weakness persists. On the upside, the key resistance is found between 1.38 and 1.39, specifically the 1.3860 level mentioned in the news. A sustained break and close above 1.39, ideally on strong volume, would reinforce a bullish reversal and could target the 1.40 to 1.42 range, which has a moderate likelihood if U.S. economic data surprises positively or oil prices continue to slump. Traders should closely monitor upcoming central bank announcements, especially from the Federal Reserve and the Bank of Canada, as their interest rate decisions will be primary drivers. Look for confirmation through candlestick patterns, such as strong engulfing candles or clear retests of broken levels. Finally, always pay attention to volume. Higher volume on breakouts or breakdowns often indicates stronger conviction behind the move. That's all for today's analysis on USDCAD here at Explain the Charts. Stay tuned for our next update.